For the position I entered during the last broadcast, after taking half profits and cutting losses on the other half, I only made about $44,000 in profit on OKX because the seed money was small. Then on Binance, I shorted 200 Bitcoins and took half partial profit and half at break even, totaling about $240,000. And this is the third wave of the third wave, so let's predict how far it will go. It might hit $150,000 this year. In the last broadcast, to summarize in one sentence, super bullish and focused on taking long but bearish for short term. From here to here seems like wave 1, up to here was wave 3, a running flat appeared, and then I mentioned that it might be that wave 5 has completed. And in fact, I entered a short position at the top. If it falls, I was going to close and take profit for half here. If it rises, I mentioned that it would be a small loss. That was the main point of the last broadcast. After the broadcast ended, it continued to fall until the next morning, and half of the profits were taken here. Then, while moving sideways, it formed a triangular convergence, so I thought it might be preparing to decline. The peak was getting lower, but if it makes higher highs, I thought it might be time to quickly take profit and close position. Around this point, the rest of the position was closed, and then shortly after, the market reached its peak right here. It slightly broke through this line and came back down, so I thought, if this is a triangle, I was right, and wave 5 briefly rose and is now coming down. So I decided to enter a short position here again. However, when it made a move to raise the another high point one more time, I held back. When it fell, it was in the profit zone, but I didn't take profit here, so it ended with a small loss. Also, I didn't use just one account. I used Binance, Bitget, and OKX, which means the entry points differ slightly between exchanges. And in between, I traded frequently on OKX. For the position I entered during the last broadcast, after taking half profits and cutting losses on the other half, I only made about $44,000 in profit on OKX because the seed money was small. Then on Binance, I shorted 200 Bitcoins and took half partial profit and half at break even, totaling about $240,000. There was a profit, so while it's not the exact amount, there was a profit of about $284,000 since the last broadcast. And after that, the price has increased quite a bit. When considering how to count this, I still think it's in the fifth wave. There's no other option. In fact, it has gone from about $74,000 to now reaching the $110,000 threshold. Yet there hasn't been any sizable correction. Since there are no signs that this 5 wave has ended, so this seems to be the most reasonable thing. Wave 5 has been extended, so wave 1, 2, 3. Originally, it should have ended after the triangle experiment 3, 4, 5. But instead, as 5 was extended, wave 3 came out, then wave 4, and as it rose in the ABC pattern, then 1, then 2, then 3, 4, and 5, and I thought it was going to fall like that in sequence. Someone asking why I like the ending diagonal so much. There's no reason not to like the ending. Since the stop-loss line is short, it makes sense to enter when the position aligns with the count, the volume is right, and the RSI divergence is there. Even with just a 50-50 chance, you enter because the risk-reward ratio is good. Being a trader is just one of those jobs, and that's how it is. Earlier, when it came out here, I thought it might be the almost end of ending diagonal, so I went in short, then exited with partial profits here, and now I'm holding half of the position. If it rises and an ending shows, my stop loss will trigger. I've set it up. If you look here, I've placed a stop loss, and then probably around when it touches this line, I'll enter a short position, and if it breaks out of the line, I'll take a small loss and end it. If not, and it falls, there will be a big profit. That's how I plan to trade, but what makes this risky is that we're really not far from the all-time high. If 2% rises, it will hit a new all-time high. It's the highest price in Bitcoin history. In such a situation, if you enter a short position and don't cut your losses decisively, it might break through the all-time high and result in a significant rise. There's this risk, but I think it's fine if you set it to stop loss right after entering. Anyway, I think it will break the all-time high. But if you ask whether it will break it right now, thinking it will break the all-time high from here and going long is really just one-dimensional thinking. At the very least, if you're human, you'd either wait to enter the market or not go long when it's facing previous resistance levels. That's just common sense in trading. So in my case, I have a lot of cash and we sold all the Bitcoin we had here at this price. I want to buy Bitcoins again, so I really hope this price comes. If this price comes through, I'll buy the spot again, and then when it goes up, then a lot of profit will be seen. And this is the third wave of the third wave, so let's predict how far it will go. It might hit $150,000 this year, so I hope it drops a bit. A buying opportunity comes to around $96,000. And today, I mentioned that I would be talking about M2, because after the COVID pandemic, we've observed that Nasdaq and Bitcoin tend to move together in terms of price action and market trends. In fact, Nasdaq and Bitcoin aren't coupled, but to be precise, it's coupled with liquidity. Capital liquidity in the market is coupled with Bitcoin, and Nasdaq coupled with the capital liquidity. So these two appear to move together in the financial markets. Since the same cause affects the results, both appear similar. And the correlation index between M2 and Bitcoin price is very high. I think it's around 80-something%. What you can see highlighted in blue is M2. This is M2 Global now. When you consider how much liquidity is expanding or decreasing, there are many areas that are quite similar. When M2 falls, Bitcoin tends to fall, and when M2 rises, Bitcoin tends to rise. However, there are periods of decoupling. It's not 100% accurate. The accuracy is around 80%. There are occasional decoupling periods. For example, from the end of 2021, Bitcoin kept falling, right? Until early 2022, it was down to half, but liquidity was expanding. Looking at these reasons, we can see a couple factors. One is that the Terra Luna crisis happened at this time. So even though liquidity was expanding, Bitcoin's price could fall due to its own negative factors. And secondly, all prices has been already reflected. They said they would raise the base interest rate. That was when inflation was really severe. So they printed a lot of money during COVID, and if you look at this steep chart, M2 rose significantly due to unlimited quantitative easing. At that time, they already predicted that they'll raise interest rates, so interest rates rose a lot. As interest rates increased, naturally, money in circulation was sucked in. So it was a period of decreasing liquidity, but since this was already known, it could be forward reflected in the chart like this. The first factor is Bitcoin's individual negative issues, and the second is pre-reflection. This represents a period where decoupling happened. That said, from a broader perspective, you can see they are mostly coupled. But when looking at this M2 chart, it's actually better to view it this way. After all, money takes time to flow from being released to reaching specific asset classes. For example, if money is released in Korea tomorrow at 9 a.m., it would take time for that money to go into Bitcoin. So they say it usually takes about 90 days for a specific asset to start moving. Therefore, you can give it an offset. That means you can delay 90 days. The chart seems to be getting a bit more accurate, especially with Bitcoin, particularly in recent times. I get the feeling it becomes more precise in this section. So now, after 90 days, as liquidity expands like this, wouldn't Bitcoin continue to rise for the next 90 days? We can make this inference, and now we need to consider how much correlation there is. This is the scoring of the correlation. If you predict 30 days, there's a 79% chance of being correct, and for 1 year or 1.5 years, it's about 90%, which has now been verified. In the short term, like 30 to 60 days, we can estimate about 80 to 90% probability of correctness. You can see that's about 2 to 3 months later. We can infer that Bitcoin might rise, but for traders like us, honestly, trying to predict what M2 will do or forecasting macroeconomics doesn't really make sense. But since interest is high these days, I introduced it to you, and it's somewhat verified, so it's worth referencing for long-term investments. However, for futures traders like myself, M2 actually is not very helpful, to be honest. Let me briefly talk about my trading plan. If an ending is provided, I'll enter a short-term short position. The first target price will probably happen around this lower supply zone line, the first profit taking. I expected it to drop more, and the second correction will happen at the $96,000 line. I'll buy a lot of spot and also enter long positions in futures. I'm really keeping an eye on that price point. But if it breaks the all-time high as is, given that the counting isn't accurate right now, I'll hold off on trading until I can see some accurate counting. No point in making moves based on unreliable data. The short position entry order has been executed. I wonder how much the expected losses will be. It seems like it might be around $20,000 loss. Wow, if it's not the wedge, the loss is inevitable. Usually it should quickly form a tail and then drop. Even if it breaks through, even if it's engulfed, I'll close the position and take losses. I cut my losses at exactly $20,000. I entered at $108,000 and stopped out at $108,300. That's unfortunate. It's another irregular extension wave. It's really not giving any good entries. The fifth wave extension has occurred, and we should view the fifth wave as extended 1, 2, 3, and ABC. When it ends, there will be an adjustment, right? After passing the new high, a correction will follow. Anyway, looking at the current situation, even if the new all-time high price gets renewed in 30 minutes or an hour from now, there won't be any chase buying for me. I'll wait calmly for the correction, then enter the spot market and buy long positions during the correction wave. I definitely won't chase the price. How can I chase when the counting isn't accurate? I know I can't.